Stocks gaining a little, as you can see, 16.95 this morning. Unemployment came in strong this morning, but unemployment did edge up to 4.2. Our senior economics reporter, Steve Liesman, is here to break down some numbers, talk about what it might mean for rates in the Fed. Morning, Steve.
Hey, Carl, yeah, just enough, I think, what you'd call it. The November jobs report, although a bit on the hot side, still showed just enough weakness to convince markets the Fed will remain on track to cut rates in December. We'll talk about more in a second. But first, look at the data. 227, right around the estimate. But those revisions coming in, plus 56. Unemployment rate rising a tenth to 4.2, with the separate household survey showing weakness, a decline in unemployed and an increase in the number of unemployed. And there's a bit of the hot stuff in there. Average hourly wages up 0.4 for a year-over-year rate of 4%, though that is unchanged. Economists at Evercore ISI writing the November employment report failed to deliver the kind of broad upside surprise that might have raised concerns that the economy could be reaccelerating post-election in ways that might threaten further progress on inflation. Important in that statement is the notion from Evercore that the surprise had to be big, as in the Fed believed to be on course to cut, and it would have taken a big surprise to derail it. Here's where the jobs were: healthcare and social assistance. Look, we've seen these before: healthcare, leisure, and government. All three of those, 72, 53, plus 33,000. Transportation equipment, that's the returning strikers right there. Retail trade, interesting number there. A little less hiring, maybe because it was late, but maybe the hiring wasn't picked up by the November report, which was the 15th. Maybe a late season meant there was late hiring, so we might get that strength in November. As many as 80, maybe 100,000 jobs could have bounced back from those hurricanes and strikes, but when the market looks at it, here's what they see. They see the idea that the Fed more likely to cut in December, a little bit more in January, but that's still a pause built in. And then that March cut, which is kind of sneaky. It was 38% not too long ago, 56% before the number. Now they're baking in another rate cut come March after a January pause. And just on the wire, Fed Governor Michelle Bowman, who has been the leading hawk, expressing continued concern about inflation running above the Fed's 2% target. Saying we're at full employment, even with the 4.2% unemployment rate, and the Fed should proceed cautiously with rate cuts. That could tee up, I don't know, guys, another dissent from her at the December meeting if the Fed cuts again, with the question of whether or not she has other compatriots in the dissenting department. Guys?
Steve, I was also interested in that retail number, given retail stocks have been so strong. Remind us, seasonal hiring, is that picked up by these reports or only full-time jobs?
No, it's picked up by the reports, and I just did the math. It was 413,000 if you look at the retail trade unadjusted for October and November, and that was like 30 or 40 below what it was last year. Remember, the seasonals are all screwed up still because they're 5-year running seasonals. They're still screwed up by the pandemic, so we have a little problem there. But the 28th, Melissa, you could write this down for future reference, is the latest possible day that Thanksgiving can come on. I think the 23rd is the earliest possible day. And so this was the latest possible Thanksgiving. You would imagine that retailers might have waited until they had to hire for the seasonal holidays, for the holiday season, and that may have been missed by it, or it just may be a season when they didn't feel the need to hire a lot of people because, hey, if you're doing a lot of that online stuff, then you'd not necessarily need all those people in the stores.
Well, I think that's the interesting part of it,
right? Is
that shift to online, right? If that's going to be sort of the permanent thing, and so we see this continued decline in retail. Really fascinating. Steve, thank you.
Pleasure.
Steve Liesman.